So according to the raw Zillow index, housing prices have fallen by 0.1%. It's the largest fall in housing prices in over a decade, since 2012. Ladies and gentlemen, we're sitting back right now evaluating home prices, the values of these home prices, and how our market is being affected in this recessionary market. And people are sitting back wondering, okay, should I invest? Should I sell? Should I buy? Is this the right time to buy? Is our values going to go down even more? Where are we at right now in regards to this recession, and where are we at in regards to the market in itself? And so let me bring a little light onto a few different things that are happening right now in the market. When you take a look at what's happening right now, Zillow did an incredible job doing research on true analytics of what's happening on the market right now today in falling house prices. So the average home went up by 2 days list time on the market between June and July of 2022. The average home is going into pending. It's taking 10 days, ladies and gentlemen. So when I look at this as a long-term investor, I've been in this game since the late 1990s, and I think about homes being on the market for only 10 days, and I sit back and I get excited, and I sit back and go, if I list a house and in 10 days, I have an offer on it and the house is pending, I'm excited, because I look at things based on a broad scheme of things. And I look at a trail of over 25 years of experience. And in how many markets over that 25 years of experience have homes only sat on the market for 10 days? And when I look at that, it's condensed into maybe 2 years out of 25 years where that was even anywhere remarkably close to being realistic. And so I almost look at a 10-day market time is almost unrealistic for the long haul, because that's not what the average majority of my professional career has presented to us in the marketplace. And so when I think about people complaining about houses not staying on the market for 1 day, 2 days, 3 days, but having to live through only 10 days, I sit back and go, you're spoiled. That's where people that shouldn't be in the real estate market that come in, that's what separates the winners and the losers. Ladies and gentlemen, the market right now is barely starting to show pre-pandemic numbers. And in spite of that, we are still up on our national typical home value. We are still currently up year over year by 16% in 2022. Now, if you look at pre-pandemic numbers and you look at where home values were in 2019, we are still up 44% of residential home values since 2019. And so when you take a look at this on a bigger sector and you look at the average home price being somewhere closer to $280,000, $250,000 pre-pandemic, and now the houses went up on the average median up to $380,000, and the first quarter of 2022 they were averaging out about $366,000 for the national average resale price of homes. Now, in July, the national average resale price of homes went down to $357,000. Still a vast separation from the $250,000 to $280,000 standpoint that we were at pre-pandemic. And so yes, as we look at this market and understand that interest rates have risen, there's tools set in place for you, the buyers, and you, the investors, to take advantage of to leverage your money correctly. Now, I talked about purchasing buy down points to bring your interest rate down. And so depending on what money is trading for each day, you can purchase an interest buy down of between 0.75% to a 1% buy down on average, depending on how money is traded. Every day is slightly different. And for 1% of the loan value, you can buy down your rate, bringing back down the interest rate level that we once had even just 6 months ago. So in spite of high interest rates, yes, it may land up resulting in the fact that it's going to cost you a little bit more on your monthly mortgage if you don't buy your interest rates. But one of the negotiating factors that you can utilize as a tool is to ask your sellers to give you a closing cost incentive. Instead of bringing down the sales price of the house, you're going to spend more money servicing debt on a higher interest rate than you will paying a higher price for the home, asking for a discounted price on the house and a credit towards your closing costs, which you as the buyer will utilize towards buying down your interest rate buy down points to bring your interest rate down to levels that it was at 2 months ago to be able to profit long term and sit at a respectful interest rate where you're not overspending monthly. Your profitability on long term holds is still very profitable and very lucrative. And so understand that as we look at these markets, yes, we are being affected. If you take a look at all markets, even some of the most stimulated markets in the country, in July, they dropped. So you take a look at areas like Phoenix, for example, down 2.8%. San Jose, California is one of the largest nationwide of metro areas that is down, and it's a 4.5% drop in real estate value. San Francisco down 2.8%. Austin, Texas down 2.7%. Raleigh, North Carolina, San Diego, and Riverside, California down 2.5%. Denver down 1.8%. But ladies and gentlemen, we were in such a hyperinflated market. Understand that those values are arbitrage compared to where we were in 2019 at still a very aggressive and progressive marketplace even in 2019. So should you panic? Should you walk away from investments right now? I would not. I would really hyper focus on the right opportunities, the right deals, leverage people's emotions right now in allowing the media to affect them so that you can go in and negotiate better buying power, better buying habits, and better assets at a time where really the market is no different than it was in 2019 before we walked into this hyperinflated market, this market with hyper appreciation of single family residences and commercial real estate, and just take advantage of where we are right now in the market. Realistically, we're still sitting at a very great place to invest, generate profits, and long-term holdings. Click below and subscribe to our YouTube channel. Pound that thumbs up button for more content just like this. Give us a thumbs up, and we look forward to seeing you next time.